everyone would love to save more money, and financial literacy can be the key to success. Here to tell us about exchange-traded funds and how it all works is the president and CEO of Wilsey Asset Management, Brent. Wilsey, good morning. Thanks for joining us.
Thanks for having me.
So just to start off, what are ETFs for those of us who don't know?
ETFs are exchange-traded funds, and what they are is they're generally, and they've changed a lot, we'll talk about that, but they're generally a place where you would put money into, and the difference with a mutual fund would be you sell it at the end of the day. Exchange-traded funds can be traded throughout the day during market hours. So they're a little more active than they would be in a mutual fund, and it's just generally a group of investments is what they are.
Okay, so what are the advantages to that?
Well, the advantages are, I mean, they came out about 30 years ago. When they first came out, they were kind of basic. They were like you'd buy maybe an index fund or maybe a group of bonds or something, and you'd buy them and just let them sit, and if you wanted to get out, you could during the day. Well, over time, they've kind of increased, and they had so many now ETFs. There's now 4,000 ETFs at trading exchange. Compare that to 2,400 stocks on the exchange. So now it's made it more complicated for investors. Like, it used to be easy out with the ETFs. Now there's so many different options that you have. It's hard to decide what to do. And actually, ETFs now make up $11 trillion. That's about a third of the total investments in the stock market as well.
Wow. And do you think they've become too complicated?
They really have, because they used to be simple. If you wanted to buy, say, gee, in our portfolio, like we have a couple of banks, but say you say, well, I want to buy banks in the portfolio, but I don't know what it's to get, you could buy an ETF that had all the banks in it, so it's very easy to get that exposure. Well, now they've become more complicated because they've got those type, but now they've added actively managed ETFs, which now they compete with a mutual fund. And in 2024, they added 700 new ETFs. So it's not so simple like it used to be. And the actively managed ETFs, there's some that are very, very risky. And people may think, oh, it's an ETF, it's pretty safe. Some of them are very, very risky.
And what are some of those risks?
Well, the risks are like, we'll look at one that went back. The first year was the ARC Innovation Fund. It was by Kathy Wood, was a manager. First year, wow, went up 150%. Like, wow, this is great. So everybody thought this was the way to go. Well, now you go back 5 years. That innovation fund is actually down about 1% over the last 5 years compared to the index of the NASDAQ, up about 100%. So the actively managed mutual funds, they're pretty good because they're done by a fund manager. But with the ETFs, they're kind of all these ones that are very risky. Some of them have one investment in them. They're trading options on them. They've made it so complicated. And my concern is with investors, they think ETFs are safe, but they've muddied the waters. They're not safe like they used to be. There are some safe ones there, but you gotta know what you're doing.
Yeah, and what are some of the commodity ETFs?
That's an important one to bring up, because commodity ETFs, you think, okay, well, I want to get exposure to gold, or maybe oil, or maybe silver, whatever it may be. Well, you got to be careful, because like the gold ETFs, they actually do, the GLD fund actually does hold gold in a warehouse somewhere around the country, so you actually are holding the gold. But some of the commodity funds, like maybe you want to get corn or oil, as I said, they don't hold the oil, they don't hold the coin, they use futures on that, and those can really add to the risk again. So you're thinking, well, wait a minute, you know, oil is going up, but yet I'm losing money. It's because the futures are not, you know, done properly, or they could be expiring. There's so many complications with that. So I'd not recommend using the commodity ETFs unless you want to buy gold. I know gold's hot right now, up like 20% year to date. I wouldn't recommend buying gold, but if you want to, that's an easy way to do it. Get the gold ETF GLD.
Okay, and any final tips for people who maybe are new to this and are interested in ETFs?
Yeah, I mean, I would say be very careful now. I've talked about, we're like kind of speeding train right now with the overall market. I've talked about such things as that right now in margin, there's like $1 trillion in margin. That's people borrowing against their equities. Things just keep going up. That's very dangerous. Valuation is very high, and that includes ETFs. So be very cautious when you're investing your money in an ETF or overall. Right now is a very, very risky time, and you got to be careful, because I hate when people say, I invested, I lost money. Yeah, because you paid such a high price, or you bought the wrong investment. Invest wisely by investing in good quality companies is the best way to do it.
All right, good advice. Thanks so much for joining us today.
Well, thanks for having me.
Of course. All right. Well.